Bitcoin versus the S&P 500. Why a minimum wage worker might invest in Bitcoin. It has high upside potential. With small investments, a minimum wage employee typically can invest large amounts. Bitcoin has a history of massive price appreciation, currently 59% annually. Bitcoin has grown from $1,000 in 2016 to $108,000 plus by 2025. A simple investment amount of $10, $20 per week in Bitcoin can grow substantially. This generates wealth disproportionate to the invested capital. Bitcoin is often seen as a lottery ticket with fundamentals, albeit high risk. Decentralization and control. Bitcoin gives personal control over assets, non-custodial wallets, no intermediaries like banks or brokers are required. For people who don't trust traditional finance, common among the underserved, this independence is appealing. Inflation hedge narrative. Many minimum wage jobs don't keep up with inflation. Bitcoin's fixed supply of 21 million compared to fiat money that can be printed to no end. If fiat devalues over time, BTC could preserve, or even grow, purchasing power. Financial inclusion and 24/7 access. Bitcoin is available anytime, from anywhere, via mobile apps. The unbanked or underbanked can access BTC easier than traditional investments. This can be crucial for those with irregular income or no credit history. Key risks to understand. Volatility. Bitcoin can drop 20 to 50% in a matter of days. This can cause savings to dip, but don't just poorly time or emotionally trade the market. Bitcoin has no dividends. BTC doesn't pay income, but can be leveraged. It appreciates when companies, individuals, and governments are willing to pay more. It is still awaiting more regulations. Governments may restrict or tax it unpredictably. Security risks. Hacks, scams, and losing wallet keys are real threats. Why S&P 500 is still a strong default option. Diversified exposure. 500 top US companies less risky than one speculative asset. Dividends. Reinvesting dividends compounds wealth over decades. Proven track record. Historically 7 to 10% annual returns for 50 plus years. Less emotional roller coaster. More stable, easier to hold through downturns. When Bitcoin may make sense to explore to investment growth for a minimum wage worker. This recommendation for a minimum wage earner is to approach it with a hybrid strategy. 70 to 75% S&P 500 or a total market index fund builds reliable wealth with dividends. 25 to 30% Bitcoin adds asymmetric upside potential without risking your future. For every $100 you invest, you would be putting $70 into a retirement account like a Roth IRA and $30 into Bitcoin. Greater than. Find out why you should never spend your Bitcoin and how to hold and invest for generational wealth. This is for information only, not financial advice. For more information, click the link in description.